This is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Insight. Well, the Fed is at it again. They agreed not to raise interest rates this past week, and the market didn't take it so well. And then, of all things, the market reacted positively later this week that gross domestic product went down in December 5.1%, meaning we're not manufacturing as much. A great example of that is where Apple came out and had a record earnings, but then warned very slow growth to come, as did Samsung. In other words, Apple saying we're not going to sell near as many iPhones. Be prepared. Folks, this is all about the consumer not consuming and 10,000 people retiring a day and leaving their consumption phase of life. And with the fewest number of people at their peak consumption age in our country, which will be for about another 6 years, we're going to have a very bumpy ride in this roller coaster of Wall Street. But there's things that we can do. But the signs are all around us, so don't believe the media hype. If Macy's is laying off 4,000 people and shutting stores, Walmart's closing down hundreds of stores. When you think about shopping, iPhones, consumption is definitely coming to an end. And as a result of that slow consumption, companies can't be as profitable. And when they report weaker than expected earnings, just like Caterpillar came out this last week and got hammered, but the stock went up. Well, there's a lot of people that are buying and hedging and betting on the market that aren't in it for you and I to make money long term. They're propping up prices, taking their profits, and letting the chips fall as they may. But things that you can do are what I want to teach you to protect yourself, to stop losing your retirement to this bear market that no one wants to admit that we're in. See, we've given it $9 trillion of stimulus, which has proven itself not to spend our way out of this. And you've got now China going through their slowest consumption wave of consumers that clearly is showing their market, which is down almost 45% just this year, with our market only down 10 because of these up 200, down 200 all around days, because no one can make up their mind, not even the Fed. Folks, stop losing. I want to teach you, as I talk about in Hidden Wealth Radio this weekend, STOP is a simple acronym from one of my new books that stands for the S in STOP, secure from losses. You see, eliminating the downside immediately puts us in a position of protection, but it doesn't mean going to cash and settling for 18 basis points and going backwards more slowly, which is better than losing, but it's not going to get us there. The T in STOP is taxes eliminated. Many people that joined our webinar this past week had said that I got a chance to speak to this past week also said, I had no idea that there were special tax provisions for major banks and corporations and now even individuals being able to avoid tax on the growth and tax on the income distributed from these special types of indexing saving solutions. The O in STOP is opportunity for upside with no downside loss exposure. Opportunity for up, not exposure to down. And ironically, in a volatile market, indexing performs better because we get to start our gain where everybody else gets to start to make up for their losses. And the P is protection. Protection from this crazy world we live in, this global economy, whether it's the threat of ISIS, the threat of North Korea with a hydrogen nuclear bomb, whether it's the craziness of manipulating currencies or oil with Iran and Saudi Arabia. That's playing havoc on our markets and wiping out people's retirement. In fact, I talked about last week that it's now 15 years later, and when you factor in inflation, people have gone nowhere being in the market, but have safely doubled their retirement savings by being indexed to the market. And I want to teach you and how you can do the same. In fact, we had one client I met with this week that said we literally, and this was a big time, very popular brokerage in the United States, that the advisor said, I don't know what to tell you. There's nothing that I can tell you to do to get your money safe. And that was 2 weeks ago, and they asked him for some solutions, and they still haven't heard back. Folks, stop losing. Here's the opportunity. Retirementprotected.com. Retirementprotected.com. But you got to hurry. Space is limited. There's a few different time choices, and then those fill up. It's free. There's not a cost or an obligation. But teaching you how to get your serious retirement savings safe and secure is what many people have said just this past week. I'm kicking myself for not doing this 20 years ago. You can learn how now. Retirementprotected.com. Here's to you finding your market correction protection.